The institutional trader has lower transaction costs. This is significant, particularly in the short-term trading, day trading. People underestimate this. Not just the commission but also the spread and the liquidity of the security. Some people sort of say, "Oh, I always like to trade gold," but gold's an illiquid thing, and the spread between the bid and the ask is proportionally quite large, and that's like a tax. That's like a commission to participate, to go across the bid and the ask. Why not go to the euro, where even as a retail investor you've got a very, very low spread? Well, these people are trading at almost no spread. They're trading often at what's called choice, which is, if they want to trade the euro, the other side will buy or sell at that price. Not a bid and an ask, but they will buy or sell at the same price. They can execute much faster than you can, and they participate at great speed in the market. And you know about low latency trading, but I mean, all institutional trading is really, really instantaneous now. They've got the advantage of size over you as well. That's a double-edged sword, the size. I'll come back to that in a moment. Many of them have got experience. It's their job to do what they're doing, and so they've got experience in it. And they've got focus. It is what they do. They aren't doing something else to supplement and allowing them to participate in their hobby, which is trading. No, this is their job. So they've got extreme focus. And if you go into dealing rooms, people are really concentrating on those screens. And I know when I was in South Africa, there were three of us in trading the fund. We talked before the market opened. We talked to each other about what we thought was coming up and where we saw risks and opportunities and things like that. Then the trading started and we didn't speak. And we didn't speak until the end of the day when we had another conversation like that. And nobody looked up, nobody had lunch or anything like that. We just worked and traded. We had lots of screens and we were flicking through the screens. We had to concentrate very, very hard to do that. And I got a lot of experience in a short period of time doing that. There is a sort of another side of this as well, because they don't get much time to do anything else. Now you have an advantage that you could spend time reading, learning, reading books. Reading John Murphy's book on technical analysis, for example, 600 pages. Well, no trader in a dealing room is going to have the time to read a book like that and do the learning. And so you have sort of the opportunity to do that. They've usually got backup. Then, unless they're trading as independents, they're trading on a desk. There are other people on the desk. The desk itself may operate 24 hours. And so have people in Singapore and people in New York, and you transfer the book to the other people. And so they've got people around them backup. They're not on their own. They're not lonely traders generally. And they've got information, and they've more information than you. So I would never, in your position, trade on the news, because anything you hear is old news, even though it's just out. It's already known, that's for sure. And so it's been reacted, it's been priced in, and it's been resolved in the pricing by the time you just hear it brand new news as it pops up on Dow Jones or Reuters or whatever. They already knew it there. I'll just tell you how extreme this is if you talk big news events, I hope none of you sort of try and trade through GDP numbers and non-farm payrolls and things like that and head for those kind of things. I'll tell you what you're up against. The release of this information is they have journalists in a room, they write the report there, and then it is attempted to be published, but there's a gate. And the gate stops it being published, and it's sitting, and then on the journalist side, they're pushing it out like that. Then at 1:30, the gate comes up and it's released. Then 6 companies receive that data, and then they distribute it there to all the other companies. They're the other side of it. Now you can buy and rent to sit on the other side of the gate, on our side of the gate, and then bombard the gate 10,000 times a second for the news release there. And what you've already done is put, if it's this and this and this and this, I'll do this and this and this orders, and every combination of outcomes for the GDP number and the other pieces of information that go with it. And then, so whatever happens, it's bombarding it 10,000 times a second. As soon as it happens, it's executed by a computer. Nobody reads it and then clicks like that. Now, you can't compete with that, and don't try and compete with that. It's impossible. They've done it there. So that bit is you should just avoid it, there, because you can't compete with that. They've got all that information. They can capitalize on that information. If you want to rent that facility, it's $50,000 a month. And it doesn't guarantee you any profit. I've talking to a friend of mine who's a salesman for a company that sells that software. And I say, well, do these people make money? He said, quite often they don't. Because even if they've got, if you like, they've got the number, because they've got every number as the outcome, and so let's say it was a shocking number, and if it's a shocking number, this should happen, they often get that wrong. Actually, it doesn't happen. So they have to make that decision of what would happen if that number came out, and they often get that wrong. So it's no guarantee, even if you get the news first, that you're going to interpret it correctly. Now, the other thing is flow. Now, this, I don't know if you know what this word is, but to many companies, they have a lot of trading going through the desks. And they've got customers, they've got people trading, phoning them up for quotes and market-making business that they're doing. And so the desk itself is helping the clients by going the other side of their orders a little bit, so the client wants a quick execution, things like that. But what they've got is information and flow going through the desk. And that is a big advantage in these sort of institutions, that's for sure. And you have to be in the right one that has sort of meaningful amounts of information. So in commodities, you see there's quite a lot. I worked for a while at Johnson Matthey, and the dealing room in Johnson Matthey, they knew, let's say 20% of all the gold traded in the world, minute by minute, was going through Johnson Matthey. And so they were seeing one guy, all the trade, the gold trader or the silver trader or the platinum trader, were one guy getting all the time all the other traders around him saying, I've got a customer wants to sell, wants to buy, wants to sell. And so he just had a constant flow, and you could observe a flow, and you could see how it was all going, and that gave you a good feel, which you're not going to see anywhere else. You'll never see that. So they got that advantage of you, that flow. And also in foreign exchange as well, in the big banks as well, they've got flow from their corporates, from their customers, British Airways, and people like that, big customers like that. They've got that flow information